Hey everyone, me Kevin here. Welcome back to another market closing live stream. I got myself some leftover cold coffee at this point. See, it says drink cup of coffee or drop cup of coffee. I don't know. Kind of want to drop it because the market's getting red again. It seems like the market just does not like the idea of going up all the time. And now it's kind of like, here's a little bit of green. And no. Here's a little bit of green. Yeah, just kidding. It's a really, really funky kind of market. I think it's a tough time for trading consistently profitably. It's easy to point out and go, oh, well, it's profitable in this. But trading consistently and profitably is a little bit harder right now, in my opinion, because of how bizarre the market is behaving. Catalysts that should be catalysts aren't catalysts. New things are catalysts. Things are really kind of shifted in a weird way. And this is where I'm looking for those opportunities regularly to buy and hodl, higher quality long run investments. Let's look at this though. Let's start with the green though, minus U time though. There we go. I'll take U time now. So that way we could just look at all the stocks. There we go. All the stocks here that we've regularly been following. So SOS actually held on. It stayed up today. Really impressive. So this was suggested to be a big push today from Wall Street, from Reddit. There was a Reddit thread about go buy SOS today, and they kept it up. They pushed it up 30%. Lots of volatility around that. We went down to like 18%, up, down, this, that, the other, and it's still at around 30%. So good for SOS. That's not going to 100 like I think some folks thought with potential squeeze, but hey, I'll take 30%. That's awesome. Fannie Mae, although most of that was already priced in before the market even opened. So then we've got HelloFresh, XL Fleet. XL Fleet was up like 20% today, and after being up 20%, literally sold off the rest of the day, and now it's up 4%. So yeah, kind of sad. Square is actually now falling into the close here. So Square had a very, very nice run, up 5%. But look at this, even Square selling off now. Jamie Dimon gave, I'm going to be releasing a video on everything Jamie Dimon talked about. It's a really good summary, by the way. I mean, he's got like a 66-page thing. After this live stream, I'll be posting it. It's probably, it's like 20-something minutes long, but it's great. I mean, just watch it on 2X. Get those conclusions because they're really, really good. So stay tuned for that. Canoe was up 13% at one point today. Now it's up 2.5%. It's like, the market is just very, very, very bizarro, the way it's behaving. Let's see here. Yeah, I mean, look at this. You've got like all of the signals here for beauty. I mean, it's just test, it keeps testing those higher support levels, higher. But then all of a sudden, test, nope, gonna follow the pattern, and then, yeah, no, just kidding. Just kidding. And for the rest of the day, basically trends down. Now it's only up 2%. Amazon's up 2%. Could have just bought Amazon, not had all the craziness. Pinterest is at $84 though, so that one's done very well for us. Continuously having a buy under target of 70% on this one has really helped me establish a position on this one that just keeps growing. Every time this is under 70, I'm like, oh my God, I gotta pick up some more Pinterest. Etsy's kind of like that in the 190s. I prefer 175, but we haven't touched 175 at Etsy for a while. All right, let's see here. Apple's up 1%, AMD, Intel, Chipotle, PayPal. PayPal did not move as much as Square did on the Jamie Dimon comments. Keep in mind, Square is a lot younger than PayPal, and the market sees Square as having substantially more growth than PayPal, like 30% year-over-year growth, potentially as high as 40 or 50% growth for the next year. We'll see, compared to PayPal being maybe closer to like 10 to 15% growth. So you really see those kind of differences here. All right, so Costco down 0.2%. We've got Purple Innovation down, sitting around $32. Rocket 22, no surprise, it's always there. 204 for Etsy, no surprise, kind of also always sitting here. Dave & Buster's 44.44, not as high as we've seen it. A lot of the recovery stocks not as high as we've previously seen them here. Let's go. Let's zoom out for a moment. Yeah, see, look at that. We really had this high around the middle of the month for some of these recovery stocks. And then we've Dave & Buster's not so bad, but we definitely sold off on the recovery play a little bit as well. And what's so weird is there's so much of this pain in certain sectors, like the recovery sectors right now, recently. Not even so much. I mean, they've been up so consistently. More so tech and SPACs and things like that. So much pain, yet actually surprisingly not a lot of volatility. Like if we pull the VIX, Yikes. Let's go VIX imbalance. Let's get the line graph. Nope, I want the graph. Hold on. I'm going to get the graph for the VIX. The VIX is the measure of implied volatility. Oh, gosh, I can't get out of it now. This is really annoying. There we go. There we go. All right, line chart. Let's get this up. It's so weird because we're seeing so much volatility in certain sectors. Again, tech, SPACs, and other sectors. But look, we're not actually seeing peaking in the VIX. The last time we really had peaking in the VIX was around February 25th, January 28th, or right before the election. This is when we had sort of a broader market sell-off, including the indices. But we're not really seeing those index sell-offs right now. We're just seeing individual stock risk right now, which in my opinion creates real opportunities to buy some of those stocks that are selling off. Like for example, Matterport kind of continues trending down here under this 14 range. I really like Matterport. If I could get it under 13, I'm jumping up and down on it under 13. So I'll wait a little bit to see if we get under 13 again there. I'll be adding to that. Penn Gaming's been kind of stuck at 100 for a little bit here. Let's see. It's been bouncing around. Okay. Yeah. I mean, well, recently we kind of recovered. I remember when it fell into like the 90s here right around the crash here, 96, popped back to 100, went back to 140, only to fall back to essentially 100 here. Really rubber banding recently to that 100 range. Shift sitting in the mid eights. Nothing new here. It's kind of sat there forever. API low 50s, been sitting there for a while. Let's look at how long. Really probably since mid-Feb that we've been sitting there. Agora, here we go. Yeah, here we go. Since the end of Feb, really fallen under 60 into the 50s and so on. Fisker's down. Lots of down in the EV space. EV just getting hammered. Possibly because maybe markets just think Biden's not going to get the infrastructure plan through. Maybe that means, the big EV boost from infrastructure we're thinking won't happen. Biden's already walking back talk about his corporate tax increase, suggesting that it's negotiable, that implications now suggest corporate tax rates of maybe around 24 to 25%, that Biden's going to end up caving on a 28% corporate tax rate. A firm lowest price ever here, really, since IPO. Well, close to lowest price ever. I think the same is true for C3AI as well. Where's C3AI? Let's type in AI here. C3AI. Yeah, look at that. Same thing. We did hit a low of 59.75, all-time low. We're at 63 right now. Still pretty depressing, to have to ride that. I mean, look, if you're in C3AI, it's literally every day. You're just getting kicked over and over and over again. Tesla has broken from our W. It has diverged from our W. It's unfortunate. It really followed the W for about 4 days here, and it just today broke. It started yesterday, but that could have been justified if we got another little push. But it looks like our W might be a whole lot wider, or it is certainly breaking at this point, which is unfortunate. Lots of negative 3% here. I mean, 3% on Tesla. That's a lot. 3.4% on Ideanomics. GameStop down another 3.4%. Genomics funded ARK 3.8%. Kind of bleeding over here. Look at this. Down 4% on Ubiquity. We almost broke under 275 here. We did there at some point during the day here. Yeah, look at that. Within the last, actually, that's not that long ago. That's right when I started the stream. Oh, of course, now it starts green candlesticking when I talk about maybe wanting to buy it. Whatever. What is this one here? Mind Medicine is also has been one that's been trending down really since February. Let's zoom out a little bit more here. Look at the run it had, though. I mean, what a run since listing here in September. and going from really, it's still a penny stock, but going from under $1, went from like 60 cents all the way to $2.60 now. Nowhere near those all-time highs of almost $5, revisiting to $4.30. What a ride. I mean, just any kind of stock investing right now, it's just on a roller coaster ride. That's incredible. Lots of SPACs. I see the comment here about IPOE. Lots of SPACs just getting kind of SPAC whacked. and so SPACs are just not where the momentum is right now. It's not saying you don't want to buy them. It's not where the momentum is. Look at Enphase, 149 again, under 150 again. This is one that I just love picking up continuously when it's under 150. Microvision at 1459, not 4%. I mean, what a day. Microvision was down like 3% when we started. It was down like 3%. I remember during this morning live stream, it's like, Microvision is down. And then all of a sudden it was way up. It shot up to 1620, only to literally sell off again. Is this the most difficult market to trade in? It is very, very difficult right now. And this is why we're doing a good amount of fundamental analysis in the Stocks to Psychology and Money group, which is really fun doing that with y'all in the mornings on the private live streams. Like this morning, we dove deep into some data on EXPI that we think Wall Street is totally missing, which is going to prove to end up being very, very good for the stock in the future. And these are the kinds of things that we're looking for. So even though we're getting these sell-offs in the market right here, we're looking for those opportunities where do we have true value that we can capitalize on? And where do we have something that maybe the market just is not reasonably pricing something incorrectly? Like in my opinion, the volatility, for example, that we see at Voyager Digital, a lot of this I think is trader hype. Like people coming in going, okay, I'm going to swing trade this. And there's nothing wrong with that. Look, if you can swing trade in, you got in at, 18, 19, when we started talking about this, or when I interviewed the CEO at 15 and really got excited about the company around 15. And you see it fall from 29 to 26 and you're like, I'll take my profits, see you later. Or stop loss stops you out. Hey, great, good, you made some profit. But to me, that has no bearing on the trajectory of this company, especially with its public competition to Coinbase. We'll see. Maybe we're hanging too much hopium on Coinbase. Coinbase, we got lots of talking to do on Coinbase, so that's going to take quite a few separate videos on Coinbase. So we are now already within 2 minutes of the close. This is incredible. We're down, that went really fast. We're down 6.9% on NEO here, not at the lows of the day, but pretty low. We've got Upstart down to down 13.37%, down to 125. I think this is heading back down to under 100, and I won't touch it until it gets there. Even on Ubiquity, I want to get in Ubiquity heavier under 175, but right now we're in a nice downtrend where I'm not super impatient right now to be buying like crazy, just because of these bizarro trends we're seeing in the market. I'm very, very ready to go shopping more. In the meantime, paying down margin, being ready, looking for those opportunities, and they come up for brief moments. And those are the ones I like striking on. Like, for example, Voyager goes under 20, I'm buying more. That's my target. I want to get more Voyager under 20. Enphase, look, I like it under 150, but with the trend of this market, I'm a little bit more interested in maybe seeing, can I get a 139 again? It's so weird because there's really no, and if I don't, it's okay with me. I don't need to get it because I've put so much in. But now I want to be a little bit more selfish, dare I say, and get an even better deal right now is kind of what I'm looking for, because I've already put so much money to work in this market. And now for me to put even more in, I want to get even better deals. Like, get me Tesla sub 50 again. I don't know if it'll happen, but if it does, I'll go shopping again. All right, let's get ready for the bell here. How close to the bell are we? Oh, 5 seconds.
It's up 3 basis points at the moment, up 10 points. It was up 92 at the high, down 82 at the low. The NASDAQ composite is just negative. The NASDAQ 100 just higher. Communication services and tech, the two outperforming sectors today, up about 0.6% each, followed by financials, banks having a nice little boost, even though yields have pulled back today. Materials, industrials, utilities at the bottom of the pile, Sarah.
Looks
There's
like
our
we got
music.
a positive close there, both for the S&P and the Dow, just barely. Welcome back, everyone, to Closing Bell. I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street. Dow closed higher by 16 points. As you can see, pretty narrow range. We started off strong, dipped into the red, and then closed pretty much flat. Biggest winner on the Dow, JP Morgan. Microsoft, Apple, and United Healthcare also adding to the gains. Boeing, Disney, and Home Depot were the biggest losers. S&P 500 also closing just up about 0.1%. Energy, financials, and real estate took the S&P higher, along with technology and communication services. Those were the two best performing sectors. Tech really having a comeback here. Materials and industrials were the bottom two. The NASDAQ closed just about flat, unchanged, even though we did see strength in big cap technology companies like Microsoft, Apple, Google, Facebook. Russell 2000, as Wilfred said, the biggest loser by far, down 1.6%. Only down for the week so far, about 1.4%, but a big spill for the small caps. We'll talk about it in a moment. Coming up, Carnival CEO Arnold Donald on the cruise line's big increase in future bookings and when the company could actually begin sailing again. Plus,
all right, let's pull back here. Great summary there. Yeah, I mean, interesting. Just again, the indices just barely moving. It's these tiny little movements. S&P 0.14, Dow 0.05, NASDAQ 0.07. But it's not really. Oh, you got to be kidding me, YouTube. You guys, hold on. Okay, we gotta. I need your help. Look at this. So, okay, look at this. Look at this really quick. Just very quickly. Look at this. Okay, so YouTube tweets, "Who is your creator doppelganger? Is there someone on YouTube who you strongly resemble?" I reply, "Judging by the spam comments on every video of mine impersonating me, Kevin on YouTube, I have hundreds of doppelgangers." Very frustrating to see them scam people. Every single comment gets a reply from these scammers, and YouTube does nothing about it. But look at these replies. "Sorry to hear you're experiencing this. The best next step is to continue sending these channels for review." You don't get it, YouTube. There are thousands of them. Thousands. We hit report, we hit hide, we hit ban, and 1,000 more show up. The problem is people automatically get an email reply. "Meet Kevin replied to your comment." It ain't me. It's a scammer. All YouTube has to do is prevent people with the same name from commenting on my channel. If anybody is interested in helping, would you mind replying to this and telling YouTube they're wrong and they don't get it? People are getting ripped off. It's so unacceptable. It's not that hard to fix either, YouTube. Jeez. Anyway, where were we? Oh yeah, we were talking about all the blood on the streets and the markets. Okay, so how did things end up? So interestingly, Voyager sold off even more going into the close. Rewired sold. Hey man, I don't know how or where to DM you. If you have a solution to get that solved, hit me up. What is it? You want IG? IG me. What's your name? Somebody says they got a solution. Rewired. Anyway, I want to look at the market here, but give me 1 second here. Rewind. Now, send me a message on Instagram. That'd be cool. Okay, so look at this. Voyager down. Look at this. And see, I think Voyager's data gets a little bit delayed because it's an OTC. So the thing is, okay, the rewired. Yeah. What am I trying to say here? The thing about Voyager Digital is because it's an OTC, you end up having the data come in a little bit delayed, it seems like, on Webull. And so it's interesting to me to see after the hours, after the market closes, this thing continues to kind of fall down a little bit. So, okay, 16.34% here. Li Auto, 12.9%. My goodness. Yeah, so you still see the pricing update here. Then we've got Express, SunPower, ChargePoint. Wow, even the Charger's falling here. I think people are maybe losing confidence in maybe Biden in getting this infrastructure package through. XPeng, oh my gosh, almost 8%. Look at these numbers here. Almost 8% in all these energy ones here. C3A, well, not, I mean, XPeng, Fuel Cell, Plug, ChargePoint, SunPower, Pain. Arcimoto down another 10%. Look at what Arcimoto's history has been here. Arcimoto, you go to the day chart, Look at this insanity. I mean, the thing ran up from $12 to $36, only to come back down now to 12. Now it's way up, obviously, from 4 and 5. And I love the folks over at Archimoto. Like, big shout out to them. I want to see them succeed. I still want to test drive that thing. Yeah, I mean, the stock's just getting beat up, but I don't think it's just them individually. I think it's the entire EV and energy efficiency market's just getting spanked. Creates buying opportunities. But yeah, look, Neo's like, hey, Kevin, here's your W. Now we're done. Like, ouch. Set back down 6.8%. Really incredible. To me, if I see Lucid, look at Lucid here. It hit 2040 on March 5th. If we see some more dips to those lows again, where we're getting to those lower levels that like right around 2021, that's because I've got a good position in Churchill. That's probably where I'll add more. Same thing for Neo. Neo would probably be sub 35. Enphase down 5% at 150. Again, I'm gonna wait a little bit there. Ubiquity, let's see if we can consistently get under that, or actually fully break under that 175. Even Bitcoin selling down a little bit here, down to $56,000 on Bitcoin. Tesla down 3%, up fractionally in the after hours here, but let's be real, it's flat in the after hours. So slowly, like, trending up, right? Tesla, for example, 670 is a lot better than the 620, 630, 590, some of those numbers that we've had previously in the month. But this is not a very clear or sustained sell-off. This is a recovery, I want to say. This is not a clearly sustained recovery. If I was to certainly day trade, in this crazy market that we're in right now, I would want to see that sustained recovery, because then you could almost day trade anything, right? Then it becomes easier. And if I'm going to trade, I would rather be in the casino where, like, I'm winning 70% of the time and losing 30% of the time, right? Right now, I feel like those odds have been stacked a little bit in reverse because it's so unpredictable. Like, we don't even have a clear, it's going from EV to recovery anymore. Nope, that's not working right now either. Everybody, I think, is scrambling for a strategy right now. And it's like totally hit or miss in terms of what's up. You think Square's going to go on a run? Yay, it's up 5%. Boom, goes right back down to 3.6%. Twitter's at 69. Canoe up 13%. You think that's going to be the trade of the day? Boom, down to just up 3%. Well, it's kooky. And I still think in the long run, Canoe is gonna get back to $15. That's why I have a sell target for that one for me of like 14 to 18. So that's kind of my long trade. Even if it takes, honestly, it'd be perfect if it took a year, which I know sounds crazy, but then I'd have long-term capital gains. I'm not even remotely considering selling any of the stocks I have for at least a year at this point, unless I go into them planning on them being trades, which I have not gone into actually since this whole crisis started. Peloton ended up pretty flat today, which is actually really incredible because Peloton, I'm pretty sure Peloton at one point was down a few percent. Let's zoom out here a little bit. Let's see here. At the same time, we get this madness in the market. We get S&P record close on CNBC here. Okay, yeah, so we fell down to about 111 today. Got it. Okay, so we've been bobbing around there since then. Makes sense. Let's listen into what they're saying about this record close nonsense.
So around the world, there's got to be, I think, higher rates coming. And then you think about, well, is that definitely a negative? And it probably isn't for banks. And banks have been under-earning because of how small the risk-free rate has been and how small credit spreads have been. So I don't hate this setup. I think it's still good for U.S. stocks. I think it's good for emerging markets. And I want to stay invested, even though I'm expecting volatility in rates. And I'll tell you where the rubber really hits the road very quickly. The taper is going to have to start way sooner than I think where people think, just because it's common sense. I don't think we could be buying the amount of securities that we're buying every month. And when that taper talk really starts, I think that's when you're going to see a big pickup in volatility. But that doesn't mean it's because the market's about to crash. It means because the environment is about to materially change. You'll have to get used to that. And I think
Wow.
we'll weather it okay. But that's going to be a great buying opportunity, I think, for cyclicals in some of these areas that you mentioned. And it will happen.
This guy's confident about the taper coming way sooner and suggesting that's going to be our next big buying opportunity is the start of the taper. That's interesting. And he's he's on here, it seems like at least 2-3 times a week. Wow. Yeah, I mean, if we do see that Fed taper, which we saw nothing of in the minutes this morning, like watch my video going through the minutes from the Fed this morning. Nothing about potentially tapering sooner. In fact, the Fed, I mean, think about it. The Fed is suggesting that rates are going to, or inflation won't start going down until 2022. Think about what that actually means. If rates don't start going down until 2022, that means the Fed is expected to basically be patient until at least 2022 because they're not actually expecting rates to go down to 22. So rates down in 2022, if they don't, that seems to be the earliest that maybe they'll start tapering would be in 2022. And that is consistent with my expectation. But yeah, that minute meeting reveal this morning, that was actually, in my opinion, that was a big tell. A big tell for the market. And I encourage you to watch that video if you have not yet. FRX is not risk-free. I understand the $10, that's what the pipe is paying for it. And look at that. It's literally at $0, or it's literally at $10. But that does not make it risk-free. It could absolutely go down below what the pipe is paying, just because that's what the pipe is paying does not necessarily relate to what the market believes it's worth. It is dirt cheap. Don't get me wrong about that. Dirt cheap. And I think a lot of these companies are unfairly dirt cheap just because they're SPACs. And the market's like, oh, SPAC? No thanks. Just hands off right now. So, yeah. All right, in after hours, we've got Redfin down about 1%. We've got SOS, Macy. Okay, not too terribly much news going on here. Arcturus, Darden, Carvana, Dave & Buster's, Sundial, these guys all up about 1%. What is this here? Let's listen in.
Quote, I have little doubt that with excess savings, new stimulus savings, huge.
Oh, okay, this is old news. We've already covered that, or I'm about to post my video covering that, but we already... Watch my video on JP Morgan. Rather than giving you this little 1 second or 60-second clips on it, you'll get the whole 20-minute deep dive on what Jamie Dimon says. And it's actually really insightful. So what else here? Go EV. Yeah, 30% up. It's still up a little bit today. What is it at? Let's see here. Oh, a little over what we paid for it. But, okay, no crazy price action here in the after hours. Let's briefly look to see what the other talking heads are covering here. Kudlow, what's he going to talk about? The wall again?
To ship jobs offshore and to invest offshore. And ironically, there has been no noted cases of a company inverting or moving their headquarters abroad since before the Tax Cuts and Jobs Act. So that's a clear indication that it's actually incentivized companies to stay here and to do business from the United States. And as we've seen, and Steve probably mentioned this, we've seen about 10 countries cut their corporate tax rates to be more competitive. Canada even went to full expensing in order to match our provisions. And so that's been the trend, is for companies or countries to find the ways to be more competitive, to attract jobs and investment. And the U.S.
All right, I'm going to pull off this reporting here. Let's go to Bloomberg for a moment. Let's see what Bloomberg's covering.
Inflation becomes a risk. It really more, in terms of our view, is an outlook for growth that is very, very strong, and frankly, stronger than many believe across the spectrum of participants in the U.S. economy.
We want to thank you, Gina Martin-Adams. As always, such great research. Get it on Bloomberg Intelligence on your terminal. Chief Equity Strategist, of course, for them. Meanwhile, on Wall Street, JP Morgan CEO Jamie Dimon says the COVID-19 pandemic and, of course, the murder of George Floyd in the past year will have exposed the devastating effects of long-standing and profound inequities. Joining us to break down the key points of Dimon's annual letter is Bloomberg Wall Street correspondent Shonali Basak. It's interesting, we're just talking about the focus on inclusive growth coming from the Federal Reserve. This is something that clearly Jamie Dimon's focusing in on in his, 65-page letter?
Yeah, absolutely, Caroline. More than 65 pages, really. And
it's 66 pages. Get it right. Okay, we're going to talk about JP Morgan in a bit. So we're not going to cover that now because I'm going to post my video about it. The video is ready. So I might just post it like in a couple minutes here. But anyway, let's listen to, let's go over here. Let's see what they're saying here.
Is the Treasury open to a digital tax where European countries could tax some of our tech giants like Apple and Facebook that have a lot of business there, but not necessarily?
They have no news. They literally have nothing. They're boring, mate. They're being boring. All right. Let's go back over here. So the sticks were kind of boring, honestly, as well. Let's try top news maybe for the suits. So top news are the suits. It's right here. Stocks rise after Fed minutes as volume dwindles. I don't know about that. a lot of our faves went darker, redder. Twitter is said to have discussed $4 billion Clubhouse takeover. Oh gosh, that's crazy. Yeah, that would eliminate the competition for Twitter. Fed prepared to tweak rates between meetings to maintain control. Robinhood is said to seek more bank credit ahead of planned IPO. That's actually not a bad thing. Just to have a credit line that gives you more access to money when you need it, but that way you don't have to pay interest when you don't need it. That's not a bad thing. I'm going to be very curious to see how the Robinhood IPO goes. I think publicly there's a lot of hate, certainly in the YouTube and Reddit community for them. But I think when they IPO, I don't know, I think it could go really well. It depends on their profitability. Like, I really want to see their S1. If they're really profitable like Coinbase, oh my gosh, it's going to be nuts. Seeking to boost its bank loans ahead of IPO, according to people familiar with the matter. The company, blah, blah, blah. Companies often secure a secure line of credit before going public, and this will make sure Robinhood has strong capital and liquidity. The move would come several months after the firm raised $3.4 billion in equity to comply with a margin call from the industry's clearinghouse. Blah, blah, blah. The company's credit lines include $600 million revolving from these companies. Robinhood last month filed confidentially for what could be one of the most closely watched IPOs of the year. Nope. Coinbase is going to be the most watched. Best Buy starts a $200 a year membership to rival Amazon and Walmart. Really? Would anyone buy this? Am I mistaken to question this? Free installation and unlimited tech support. That's smart, actually. That's actually really smart. Free install. Oh, that's actually juicy. Best Buy. That's smart. Where get out of here. Where is it? So I don't see them advertising this yet on their website. So let's just go back to it. That's not dumb. Okay. The odds are people aren't going to call their tech support all the time anyway. You get an installation once. Maybe that encourages you to buy more stuff anyway, because the Geek Squad will come install it for you. I believe that. Up to 2 years protection on most purchases, free deliveries, and concierge service that's available to answer questions 24 hours a day. It will cost $199 a year or less for those who hold a credit card. Latest attempt to generate more revenue from services, which last year accounted for just 4% of U.S. sales. Oh, their services are nothing. Subscription services. That'll be interesting. The program, Total Tech Support. That is not a bad idea for Best Buy. Let's see really quick how their stock is performing. Best Buy stock. We'll do the quick cheat sheet here. No, I put it into Google, not Yahoo. Best Buy stock. There we go. So, it's kind of literally flat for the last 6 months. Okay, well, 4.9% over the last 6 months. The last year, it's grown since obviously the crash. And even consistently through the crash. It's not bad. It's certainly not a high growth name. PE ratio of 17. Yeah, kind of pricing in low growth. But we would expect that. Very interesting. The service. I'm interested to see how that does. Because if that helps them sell, well, you can't even buy appliances right now anyway, though. Everything's behind. I don't know. Everything's a mess. Everything's a disaster right now. How about that? There you go. All right, folks. Now I'm going to remind you that there's a coupon code link below for the amazing programs on building your wealth. And right now I am going to click post on what Jamie Dimon just said. Some big warnings for the market, or some big market warnings. I like that. Yeah. There we go. JP Morgan. All right, let's post it. I should probably end this live stream and then post it, but go look for that. It's going to be awesome. All right, folks, thanks for being here. We will see you at 2 o'clock for MP Materials. So 40 minutes for the MP Materials CEO interview. Thanks, folks. We'll see you soon. Bye.